Hey fam, it's Trader Stan. Today I'll be analyzing the crypto market and I'll be tying it back to the US dollar. Bitcoin in particular, because whatever Bitcoin does is then a consequence to the alt market. Alts are going to react off Bitcoin, but Bitcoin reacts off the US dollar. And I'll tie it all in and show you how it does so. We'll start off with the US dollar and we'll just get an idea of what we're looking at and what we're going to expect. So I've got two ranges in play for the US dollar. I've got this 2016 range, which is the larger dominant range, as you can see. Then we've got this January range that I've done in the purple, and that's basically just sideways movement at the top half of the 2016 range. In particular, I'd say the 75 to the 100% mark with a few deviations and then some support. And this red box that I've drawn out, it's an order block. So it's the last candle before the market does the opposite reaction. I'll show you what I mean. If I go down to the daily, because it's one candle off the daily, right? And I go to the start of this order block, which is here. Do you see how it's one down candle? And the market then turns the opposite direction. So we have this down candle. The market then comes down, sweeps some liquidity, but cannot touch the bottom or even break below. And then from there, we pretty much take off, right? We do a retest here. It's still bullish in terms of the US dollar because there's a gap there and then it takes off. It just forms basically bullish market structure from this point forward in terms of no sideways movement, right? Because you had sideways movement here and then we basically go up. So going back to the weekly, later on down the tract, that then acts as support and yeah, it doesn't act as resistance because it's not below. I was going to say support and resistance. You just get used to saying certain things in an order. But yeah, it basically acts as support. You can see it acts as support there, support there. We get a deviation, support, support. And if you look at this in general, right, it looks like it's going to come down and act as support again because I tend to lean quite bearish on here. Now, I'll tell you why in a second. So 2016 range, right? We get this deviation and we just blast off top. It's just one way movement, like a solid uptrend, and it's massive. It creates this circle, which is inefficiency, right? It's a single body candle with either side leaving a massive gap, which is this circle. Markets are attracted to it, and one way or another, markets are going to try to take the inefficiency out, especially if it's about to go the opposite direction. What do I mean by that? So we have this sideways movement here, which is that January 23 range. And what the market's been trying to do is get to this inefficiency, right? And what I'm going to do, I'm going to highlight this candle here, which is the last up candle before the market went down. That there. Just to break the colors up a bit, I'm going to do this as a green for now, right? So what the market tries to do is it tries to get above, and obviously it can't. So we come back to range bottom, mid range. It's basically like recharging. Think about it as like recharging, right? Because it's going to give it another crack and it's going to go harder this time. So it recharges and bang, it gets to the top, right? But there's not enough strength in the US dollar to reclaim it. Reclaim meaning it would stay above and go up, but it's not doing that, right? So it comes back down because it needs to recharge again. It then gives a third attempt and then a fourth attempt. Still hasn't been able to break out. The aim of this is to take out this inefficiency. That's what the market's attracted to, right? We then come down, create a larger deviation, and then boom, it finally succeeds. Taking out that inefficiency, the thing is, this inefficiency has an order block on top, which is this here. And anytime there's an order block and below that order block is inefficiency, especially inefficiency that's strong like that, like a large one, right? The market's never going to be able to break through it. It might take a few attempts. And this is the first attempt that it's tried there and it's had a rejection. Yeah. From this point, I expect bearish market structure to start forming. And it already has if you go into a larger time frame, but on like a weekly basis, it's very slight, right? we've got this at the moment. I'm going to change the color just so you can see it a little clearer. Yeah, that should do. It started, but I'm not fully convinced yet. In terms of, I'm expecting this to spike up one more time, maybe back to the yearly open. If we were able to do that, basically what we'd be looking at is something like this. Back to the yearly open, and then bang, we get underneath January 23's. Maybe we go on top of 2016's range. At the moment, I'm expecting that, right? From this point, what I'd like to see is a continuation. Something like that. Remember, I said this area is going to be quite strong. So the market will most likely, to be honest, from here, go back up. Maybe something like that. Don't pay attention to the time frame down here. It's not something that I'm saying, oh, in September this will happen. I'm just drawing out a pattern, yeah? This all could happen in the matter of like a lower time frame around like here, if it wanted to. The market's going to react as fast or as slow to something as it wants to. But in terms of what I'm basically trying to show you is I expect us to get back within 2016's range and at least test the mid-range. All the action has been happening within the top half, right? But because we've got President Trump in presidency, and his background is business, his background is the markets, right? He knows the markets, he plays the markets, he knows in detail, and he knows far better than I do. So, if you look at his last presidency, what happened during his last presidency? He brought the US dollar down, right? That's all Trump. And what it does, it stimulates the economy. And what Trump talks about right now is making the economy strong. And that's why I believe we're going to get a drop of the US dollar. It's needed anyway. Two reasons. Just from a chart analysis perspective, forget everything else. You've got so much untouched liquidity. Like, we haven't even attempted to take this out. All of this was just choppiness, sideways movement. One last run, and then we come back down. To me, that makes sense. Now, if this was to play out, we'd have a mega bullish environment for any sort of investing, right? Whether you're investing in the stock market, whether you're investing in gold, whether you're investing in crypto, this is your bullish scenario. This is what we call the bull run. This is the bull run itself. And everyone seems to tie the bull run back to it's when Bitcoin goes up and it's when crypto goes up. Yeah, 100%. But how is it going to go up if you don't have a bearish US dollar? You're either investing or you're holding dollar. You're doing one or the other. Um, and if the dollar is looking bullish, then yeah, the bull run's not going to come. You need a bearish dollar. Having said that, we haven't really had a complete ridiculous bull run yet, especially if you compare it to last bull run, right? That euphoria, that craziness. We had that NFT market happening and all sorts of crazy stuff happening. We haven't experienced that yet in this cycle. And a lot of people are thinking it's never going to come this cycle. They're thinking, oh, it's changed, blah, 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 blah. My whole point is this: how can you be expecting any of that if the US dollar hasn't broken down yet? I'm going to compare the last cycle of BTC and how the dollar reacted. And I want to show you something. So I'm just going to get rid of a few of these drawings. I'm going to leave this here because this is what I expect to happen, right? And the other thing I was saying is, remember, the market is attracted to inefficiencies, yeah? So it's filled this out there. Now there's really no more inefficiency to the upside. But on the downside, you have inefficiency there, inefficiency there. You have inefficiency in between there. If you go into the quarterly, right, all of this is inefficiency. You have inefficiency here. This got filled out, but then, like I was saying, you go to a higher time frame. A lot of this is inefficiency, and a lot of it hasn't been taken out. So if the market's taken out inefficiencies at the top, rather than just going blow off top and going ridiculous, which I don't think is going to happen under Trump's administration anyway, you still have all these inefficiencies to collect from the downside. So automatically, I lean towards this sort of price movement. Now, I was saying we'll compare it to the last cycle, right? And I'll show you the dates and we'll line them up in a second. But what I want to say is this: from range low, which is here, we went to range high, which is here. Now, these candles in particular, these ones here, this is the COVID movement. And after COVID, what happened? The US government printed more money than they've ever printed, which then basically waters down the US dollar, right? And when I say water down, it makes it weak. Just think of like cordial. You have you got cordial in a cup. The less water you put in that cup, the stronger that cordial is going to be, yeah? But if you just thrash a little bit of cordial with like 2 liters of water, there's less cordial in that cup now. It's been completely diluted, which is exactly what happened to the US dollar from this point. The US dollar just went bang, yeah? That created a massive bull run. It created a massive bull run in BTC, for example. But this is the part that people are missing. The bull run didn't start till around here. This was the crypto bull run. And we'll line the dates up and I'll show you how. And I'll also explain why. Now, this why is like my thought process, yeah? It's how I'm analyzing the market. So I'd say around September is when we got a clear direction. And why I say that is because we came to range low, we retested, and then we started breaking down. And that gives us a range. It gives us a range down here. So that's the top and range bottom. So it gives us a range, yeah? So we're going to go with like mid-September. Now, where was Bitcoin last cycle? So this is Bitcoin. We're also on a weekly. Same story. We're looking at where were we mid-September. Now, mid-September, we were around here, right? The bull run really hasn't started. This is the start of the bull run. Now, where I think a lot of people go wrong is they look at dates. So they say, all right, if the bull run started in September in the last cycle, why isn't the bull run starting in September this cycle? And more importantly, like for alts, yeah, because to be honest, Bitcoin's doing fine. Like Bitcoin looks like a beast, but alts haven't really started kicking off yet. If you look at the total 3 market, which we'll analyze separately too, this is total 3. It's still within range, right? Where Bitcoin, we're sitting well above range. And people are saying, why isn't the last cycle behaving? Well, the last cycle isn't behaving the same way. Reason being is because of this, because we haven't had Dixie started breaking down yet. If you look at this, Dixie's already broken down and it's rotated, it's going sideways at range bottom. Yeah. We're not at range bottom at this stage. We're at range high. So, previous cycle acted like the cycle before in terms of crypto, right? And what I mean by that is like this was one cycle and this was 2 cycle, and the time frames were correct. The time frames weren't lining up because of the BTC halving, right? The BTC halving is going to push Bitcoin up regardless to a certain extent, but then you need the market to take over. You need liquidity to come in to extend and actually create that ridiculous bull run. The Dixie was ranging. It did exactly what it did the previous cycle. So 2016 to 2017, we had a range high, then we came down, right? Now, the next cycle, we're at a high, we come down. So in terms of 2017 cycle and 2020 cycle, the behavior of the Dixie is the same, which is why Bitcoin behaved the same way. I hope I'm making sense here, and I hope you're following what I'm saying. I'm just going to carry on because I understand what I'm saying. All right. Um, what I want to highlight in this is that the bull run didn't start till here, right? During this phase here. And we've already come down. You compare this to here now, we haven't even formed a strong bearish market structure to say that we're coming down yet, let alone start consolidating somewhere in order to create a bullish environment. Yeah. And this area here really stimulates gold and stimulates the stock market far stronger than it does crypto. Crypto really, in terms of big money, comes in when they take profits and they've got money to risk and they don't care losing that money, right? That money then flushes into crypto. We're like the last in the pecking order. So therefore we get the liquidity at the last point as well. And if you look at how gold is running right now, gold is at an all-time high. Stocks are at an all-time high and they both look like they're going to continue. So if they're going to continue, I'd say like in terms of our bull run in with crypto, probably won't start till we get till around here. Um, and from there, that point, I think we're good. I think we'll start getting that liquidity come through, but it still is quite early. And like I was saying before, I think where people go wrong is they're looking at that 4-year BTC cycle and expecting everything to happen around then, but that's not the case. It has been because the dollar has done the same thing identically 2 cycles in a row, but we're kind of at a different point with the dollar right now. The setup itself for the dollar, though, I have to say, is huge. If dollar came down from here to range low, we're here at the moment, right? But I expect to spike up to the yearly open. If the dollar came from here and bearish market structure down to range low, that's a lot more liquidity than we've experienced in these previous ones, right? I'll just point out the bear market too. Now, the last bear market really started here during this November period. I'm just going to get rid of, I'll clean this up a bit so that this makes a lot more sense here. Now, the bear market started, I'd say, around November. November's around here. Is November, it's a break out of this range. So this sideways range, November, we broke out, we retested, and then it took off, yeah? And there was no looking back for the Dixie. The Dixie, like, absolutely went like a meme coin kind of thing. Now, if we look here, where did the bear market start? The bear market started around November, which was a break of this cycle, right? So basically, you have just a really simple and clear downtrend. And from that point till now, you go down, there's this choppiness. Bitcoin hasn't done too bad. Like, Bitcoin looks like a beast right now. So from here, we'll transition into Bitcoin and what I think is happening, right? So we get this mid range. This is a quarterly range, yeah? And I say mid because it's almost like a midpoint from there. That's the midpoint, and then you have this above here. But it's a quarterly range. If you go into the quarterly, it's one quarterly candle, which is this candle here. I'll get rid of that. I'll go back to our weekly. Now, if the Dixie is going to break down, which I believe it is, I think we're looking for this market structure. And if this market structure is what Dixie is going to do, then how do we look into BTC and figure out what's going on? Price is stuck here. And this is December's range. If I go to the monthly, you're going to see it's one candle, and this one candle is December. So price is within December's range, right? And this weekly candle is quite important. If we close below this December's range, it's the first candle that has done so, and more likely than not, will end up filling out this inefficiency right here, which would mean our range would go from here to then including this whole thing. So I'd then say this whole thing could be a range, right? It could either play separately, so like do a top, bottom, then go back up and start ranging here and then go up, or it could just be a wider range. And it doesn't mean it has to go up 1 or 2 times. The amount of numbers is insignificant. It could do it once. What I mean by that is, oh, I didn't delete that. Give me 1 sec. What I mean by that is it could come down and then go back up and do something like that. Or it could range up and down twice, go once and something like that. Or it could literally just do that. It's going to do whatever it wants. I'm not here to predict which way the lines are going to go. All I'm trying to do is show you where I think we're going to get support, right? So the first scenario is I want to see where this weekly closes. We close below December, and I think we're most likely going to fill that out, which would then mean I'm looking for support off this order block. If it close below, we'd retest the high, then we take out that inefficiency, come into this order block, deviate, and get back above, bang, back up to December's range. We'd have to close above, take out the yearly open, get back above, and we're good to go, right? So that's one scenario. Now, this pullback could completely take that order block out, and we could retest this, right? And do something more, maybe along the lines of that. There's different variations, and no one knows which one. But one thing I want to point out is we've done something similar here. So this consolidation below, you had lots of inefficiencies, right? You had inefficiency here, you had inefficiency here. And what the market did is you have an order block. So this is a weekly chart once again. See this one candle here? I'm going to pull this across. And if you look at that, what did we do? We were consolidating just like we're consolidating here. We came back down, we filled out this order block, which basically took out all this inefficiency, right? We left this, we didn't even touch it. Market then gets back above and takes off. So similar scenario, yeah? And similar scenario, and basically we're just looking for key area of support. And you really can't be too bearish unless we were to break below and then go down. But I'm not looking at that at this stage because, in my opinion, the dollar's going to come down. So all I want to do is see where can I get support so I can start looking at my longs again. And at this stage, that's one scenario, right? Next scenario is this. If this weekly candle closes back within December's range, well, then we just got a range bound environment inside December's range, which would mean this. Get rid of that. Get back above the yearly open to the mid range, and we might do something like that until it's ready to go back above. We break above and we're gone. It could do that too, and this could literally just be a wick, just like this was. It didn't hang around for like that's a big movement, right? From 58k, we went down to 48k. So in terms of like, if you look at that, 96 to 86, yeah, about the same. And that's like that we'd call that a doji candle, right? You see something like that, and the market's going to turn. So then a retest of this order block, and bang, we go above. Do we fill this out? I wouldn't mind. Like it is what it is. If it's going to, it's going to. But I'd be looking to long 100% from here, and I'd be looking for the markets to turn from here. If we now go into ETH and just see what ETH is doing, ETH's a bit of a tricky one, right? Because it's just got this sideways movement. I tried looking at it and trying to figure something out. It doesn't, like, to me, it's just range bounding. And I'll be honest with you, I find it a bit boring. But this order block's been really good support. So this is a quarterly range. If we go on the quarterly, it's one candle, which is this candle here, coming back into the weekly, sorry. I picked out two order blocks. So this one order block here, last up candle before the market went down, and last down candle before the market went up, and prices basically stuck within this area. We had a little bit of inefficiency here, which is this pullback down. We've got some inefficiency here now, and yeah, I'm just patiently waiting to see what we do. If Bitcoin's going to fill out this inefficiency here, then is there a chance that it could even do something like this? Maybe something like that. Yeah, maybe. And then go off. Like, it all depends. It all depends on what this does, right? But what I found a bit more interesting, I'll be honest with you, like it's been a boring play. Am I bearish, or am I one of those people that says that ETH isn't the prince anymore and Bitcoin was the king, ETH was the prince? Nah, man. ETH is still the prince. ETH is going to do what it's going to do. It just hasn't taken the moment to shine yet. But I have no doubt that it will, because this range bound environment is basically like a supercharger, yeah. And the longer it moves sideways, the harder it's going to go up. And I reckon it's going to leave a lot of people in in amaze in amazement. Sorry, man, I'm chopping my words up because I'm just going to do this for a second. Yeah, 200% mark being around 7k, and then the 300% mark would be around close to the 10k. So I think it looks solid. It's it's something, if you're looking for something to hold as a spot trade, I don't think it's a bad one. I reckon that's pretty solid, just because it's been, that range bound environment is so it's been so proper. But like I said, could it come below and like take 1 week and take some of this out? Yeah, 100% it could. Uh, there's nothing to say it won't, especially if BTC plays that scenario that I was showing you to take this inefficiency here. Total 3 was a lot more interesting. So Total 3 being the alt market, so the crypto market excluding Bitcoin and Ethereum. So take them out, and everything else that's left over is the Total 3. I was meant to delete that. When I have stuff on my charts, it does my head in. I have to take it out. Yeah, so Total 3, we've got a quarterly range once again. I love my quarterly ranges. One candle being this one. The other thing I've marked out is my yearly open. And then if we go back to the weekly, I have an order block. It is the last up candle before the market went down. And then now it's been acting as support. Yeah. It's really important to be able to mark out these order blocks, because they really help you in terms of where you think pullbacks are going to come. Now, with Total 3, right? It doesn't matter what chart you're looking at. It's not like you can buy a coin that's called Total 3 and trade Total 3. Total 3 is made up with a bunch of coins. Yeah, it's like an index. It's made up of a bunch of different things. So Solana, Sui, XRP, whatever you want, as long as it's an altcoin, it's a part of this. It still behaves the same way in terms of just chart analysis. There's still candles, there's still order blocks, there's still inefficiencies, and this inefficiency is a major inefficiency. Now we've taken liquidity up to that point, right? But anything below that, right down to this point here, is still up for grabs. So I'm just going to draw this out and show you what I mean, right? Anything between there to here. So this area that you've got, this little area here, is still up for grabs in terms of it's still inefficiency, and the market is going to feel it out. It might not do it now, it will do it one day. And what I personally am expecting from this is for the mid range to hold. So this area here, that's the area that I'm expecting to find support. And if I was to draw out how I think this is going to play out, is basically like this. So if we do get a close within here, because this could be a wick, just like this was, right? It closed up here, and that was, it just basically becomes one huge wick. It could do it a second time, right? Or it could possibly close within this order block. I wouldn't mind seeing something like this. And I think this scenario plays out if BTC takes up that inefficiency like we were speaking about before. That would probably play out. If it doesn't and it closes within December's range, then I'd expect this to be a wick, which I don't mind either, right? But either way, if it doesn't do it from here, that means it did it from top of the order block rather than the mid range here. But either way, I think support is between this mid range. It could possibly deviate, which is why I've given it a little bit of room. You've got these two order blocks here, right? Which is like a last down candle before the market went up. So you could even say something like this, just to give it a bit more accuracy. Something like that. So whether we find support there or whether we find support like that, either way, I think it all depends on what this is going to do. But we're still good. And all of this I'm basing off the US dollar doing this bearish market structure and going down. Just realized I left a lot of drawings on here. Quickly get rid of them. There we go. So I just wanted to touch on a couple of vaults, just to show you how you could relate something like this onto something that you're actually holding. So a lot of people are holding Solana, for example, and Solana's been tanking, and there's a fair amount of noise on crypto Twitter, people saying that Solana's over. Do I think it's over personally? No, I think it's just a bit of FUD. Everything goes through its FUD moments. But basically for Solana, we have a quarterly range I've marked out an order block that's acted as support. So this last down candle here has been acting as support and it's been doing a good job. And remember, choppiness at the mid range, right? So basically, we do a sweep like that. And then on the way up, we're just getting a bit of choppiness. That's it. Like it's nothing to really freak out about. Is the trend still on an uptrend? 100%. Still like that, right? If we get this close below, which is this here, then I'd be expecting to see something like this. So let's say this closes. Let me actually, you know what? I'll do this properly. So we have this uptrend here, and I do it like that, right? Now, one thing we could do is just range here. So range on this top 50% of this entire range, yeah? I'd be looking at that just as I said, if we close back within this December range and we decide to go sideways, then I'd expect Solana to go sideways here on this top half, right? If Bitcoin was to eat the inefficiency that we mentioned earlier, what I'd be looking at in Solana is something like this. I'd be expecting a breakdown, possibly to there, start showing bullish market structure, and it's back on. And basically, all that does is create a deviation at the mid range within this order block here. That's what I'd be expecting to look at. Or do we close back within range? And like I was saying, range in between here. They're the two scenarios I see. This happens until Bitcoin decides to break above, which would then allow total 3 to start some bullish market structure above the yearly open. Sorry, above the yearly open is bullish. So above here is bullish around that area. Same thing for ETH in that case, yeah. That would be bullish around this area too, like right above. And the other one I was going to show you is Sui. So that's Solana anyway. And with Sui, what I'm looking at, same thing. We're in a range bound environment. Um, how I got these ranges on Sui is I went into the quarterly. So I get all my ranges from my quarterly in terms of higher time frames. It's one candle, and all I do is I double it. So this is one range, I double it to 2 range, I double it to 3 range, and you can see it works pretty well because from look at this top of the range, right? We're capped until this candle, and this candle just goes berserk, right? Goes berserk right up to this mid range here. If I did the 75% mark, probably come in somewhere around here, which this deviates from the 75% mark. And then we close like pretty much like, look at that. Just takes all the liquidity out from the downside. Going into the weekly though, also we did was that we had this inefficiency here. So it had basically a top, a deviation, and we took out the inefficiency. Like I say, if there's big chunks of inefficiency and you're looking for an upside, chances are it'll fill out that inefficiency first before it continues to go up. So, having said that, the main point of the range right now is between this order block and this high here. So, one scenario is we could just range in between that, which would mean that Bitcoin is ranging in between December. If we decided to fill this gap out, what would Sui most likely do? Well, then we'll most likely fill out this order block. Yeah. Which would make a deviation. I'll get rid of this now. It would create a deviation around here as such. So from here, you'd expect it to do something like this and then go up. If we stay within that December range, then you know what? Not saying alts could not still tank a little bit. It could still do something like that. Or it could just possibly like range in between. So this half to this half. And that's just basically a deviation of that. We could create another deviation of that and continue this. It's choppiness until BTC decides to break out. And remember what I was saying. The last time on the last bull run, we didn't get a bull run until Dixie bottomed and started ranging. So until Dixie bottoms and starts ranging, Bitcoin's going to do whatever it wants, and that's most likely trick the market and take liquidity from the upside and the downside until it's ready. So basically, guys, for now, I'm keeping my eye on the Dixie. If I take any trades, it's going to be very short term, nothing in terms of major swing plays and stuff like that. I'll be looking at my support levels, which I mentioned for BTC, whether it be Ethereum or the alts. I've got all my plans laid out. It's just a matter of waiting, being patient, and executing them when the time comes. I hope this helps. I hope this gives you some insight on how I'm looking at the market. It's best to do your own analysis. Everyone sees the market differently. Play it to your strengths. Thank you for watching and thank you for your support, guys.